Good morning this Wednesday, the 31st of January. I'm Grady Wolf, market analyst with Bell Direct. In Europe overnight, markets extended the week's rally into Tuesday's session as investors assessed preliminary fourth quarter GDP figures for the eurozone, which came in at a flat reading for the third quarter, indicating the eurozone economy stabilised and narrowly missed a recession. The Stock 600 and Germany's DAX each rose 0.18% on Tuesday, while the French CAC added just under 0.5%. And in the UK, the FTSE 100 rose 0.44%. Wall Street closed mixed on Tuesday as investors shift focus to look ahead to the Fed's interest rate decision on Wednesday US time, with markets expecting the Fed to maintain rates at the current level and not cut too prematurely. The S&P 500 closed flat, the Dow Jones ended the day up 0.3%, and the Nasdaq fell 0.6%. General Motors shares jumped 8% on Tuesday after the automaking giant posted better than expected earnings, while Starbucks shares are trading down in after-hours trade after the coffee giant released disappointing earnings results. In Asia, markets mostly fell on Tuesday, with Hong Kong's Hang Seng leading the losses as markets digested the fallout from the liquidation of embattled property developer Evergrande. The local market is hovering in record territory, with the ASX 200 closing 0.3% higher on Tuesday as earnings season ramps up and favourable economic data boosts investor sentiment for a soft landing both at home and in the US. The tech sector took strong lead from the tech-heavy Nasdaq on Monday as the local high-growth sector rose almost 2% yesterday. While we are hovering around all-time highs for our local index, it is important to realise the market gains are not across the board, and some sectors are rallying against market expectations. For example, China's struggling property sector would traditionally have weighed on our local iron ore miners and prices, as the country is Australia's largest iron ore importer. However, the price of iron ore is still around $135 a tonne on expected stimulus out of the Chinese government. Megaport jumped over 29% during trade on Tuesday after the cloud connectivity provider said its revenue increased 5% to $48.6 million in the last quarter update. City Chic, a retailer, recovered ground yesterday, rising 22% as offshore buyers circle the company's North American business. And Nickel Industries also soared 22% yesterday after the Indonesian-based nickel producer announced an increased dividend and unveiled a share buyback valued up to $151 million. Aussie retail sales data for December came out yesterday in a decline of 2.7%, which was attributed to a few reasons. Firstly, the Black Friday and Cyber Monday sales period saw $9 billion spent across the 4 days, and which was a 22% rise on 2022, in a sign that many Aussies snapped up the bargains ahead of the December trading period. Additionally, the high interest rate environment we are currently in meant a lot of Aussies continue struggling with the high cost of living, thus reducing discretionary spend altogether, especially during the December period. On the commodities front this morning, oil is trading 1.4% higher at $77.81 a barrel. Gold is up 0.08% at $2,033 an ounce, and iron ore is up 0.73% at $138.5 a tonne. One Aussie dollar is buying 66 US cents, 97.4 Japanese yen, 52.1 British pence, and 1 New Zealand dollar and 8 cents. Ahead of the local trading session here in Australia, the SPI futures are expecting the ASX to open the midweek session flat on the back of that mixed session on Wall Street overnight. And now let's dive into a trading idea for your consideration today. Bell Potter has increased the rating on Mader Group from a hold to a buy and has raised the 12-month price target on the leading provider of specialised contract labour services following the release of the company's December quarter update, including revenues of $189.3 million, which was driven by the Australian business outperforming the rest of the world with $141 million of that revenue. The company also reiterated its FY24 revenue and NPAT guidance and paid down debt over the period. And that's all we have time for this morning. Have a wonderful Wednesday, and as always, happy investing.